my name is Tanysia Komers. I am a certified financial planner and the founder and president of KFLA, Canada's first financial literacy agency. And today we are talking to Yen Dang of Aspen Valuations, who is a business valuator. And you founded your business in 2017, but you've been doing this for at least 12 years, plus another 5 as a CPA, right? Or a CA.
Yeah. Yeah.
And so I just wanted to clarify, you have a chartered business valuator, as well as your CA, and the American Society of Appraisers. So could you tell me a little bit more about your chartered business valuator and this Society of Appraisers?
Oh, so they're both designations for business valuators.
Right.
One is in the US, one in Canada. There's only
Right.
one in Canada, but in the US, there are 3 organizations that issue credentials for business valuators, and I'm in the process of obtaining the senior appraiser designation with the American Appraisers Society.
Cool. So that means that technically you can work across borders, hey?
Yeah, I can. Are you having dinner?
Well, so okay. Am I having dinner? You told me that the way that you relax is by hanging out with your kids for family dinner, right?
Yeah.
So I set up dinner, yes, and actually,
oh, that's nice. Yeah.
Something in the oven that I have to take before we go. What we wanted to talk about today was basically what your expertise can do for people in this time, right? Like, so we had a couple questions. One of the first ones was, like, what is COVID bringing around right now, right? Like you've been valuing businesses for at least a decade. You've been looking at them for more. What's changing now?
In the past, if there's no such a significant event, then, if the valuation is done a few months before and the business hasn't changed much, then that can be okay. Yeah, so the people don't really need to update the valuation report. For example, for a divorce, valuation should be done as a current date. So if it was done a few months ago and COVID-19 didn't really, wasn't much of an impact, then that might not be relevant at this point, because for family law purposes, assets should be divided as of the most current date.
Right. So basically what you're saying is that some valuations may still be valid through the COVID changes and some of them aren't. It kind of just depends on the situation, hey?
It depends on the situation.
Yeah. Well, one of the things that we talked about last time, which I thought was really important, is, the new reality of cash is king, right? Because most businesses have been operating on the assumption that they can borrow money, that, credit will be easy to access, but we're seeing that change. So please tell me a little bit more about that.
Yeah, so at this point, we have seen that COVID is causing unprecedented disruption to a lot of business across sectors. We have seen closure and lockdown. Business don't have any revenue coming in, but they still have to continue paying fixed costs and staff. And we see layoffs. We see changes in the required changes in operations. They have to buy PPEs. They have to reduce capacity, for example, in restaurants or a museum or daycare. So all of that affect cash. So businesses need to know whether they have enough liquidity to survive or even to meet covenants of their existing loans with the bank, and whether, if they're doing well, they should know where they're at to take advantage of the situation as well, by expanding the business or acquire or take over a competitor, for example.
It would be beneficial to a business to analyze their current cash flow so that they can determine whether or not they have enough liquidity, if they can survive.
Banks are tightening their new loans or extensions of loans unless their clients can demonstrate that they are able to make loan payments down the road. So having a very solid business plan that showcase the cash flow projections that take into consideration the real reality is very important for businesses to get the loan that they need.
So what exactly is a cash flow projection? I mean, you're saying that they're really in demand right now, and it makes sense if you're saying that, the banks need to see cash flow in order to approve loans, that,
Yeah.
businesses want to see what their position is, but why are they in demand right now and what are they exactly?
Right. So cash flow is basically the analysis of what money is coming in and out of a business. By
Right,
doing cash flow projection, we know um, we can forecast how much cash a business will have at a certain point in time.
right,
It could be in a week, a month, or every quarter or a year.
right.
When we do cash flow projection, we look at all three critical financial statements, which are profit and loss, um, balance sheet, and cash flow statement. So that would give us a full and realistic picture of the business in terms of profit and how much cash they can generate.
It sounds like a pretty simple thing that somebody could do, right? Like just look at their statements and sort of pull together a cash flow
Yeah.
projection, go to the bank and say, hey, look, like this is how much I'm making and this is what I'm spending. So is that all a cash flow projection is? Is there more to it? What mistakes would people make when they're putting this together? Because I assume it's probably a bit more complicated than just an Excel spreadsheet.
Yeah, we can spot certain things that business owners miss. So forecast is only useful when it is a good and quality one. For example, sometimes we saw the internally built forecast where they project revenue going up, but they didn't project the cost associated with the increased sales or even working capital requirement.
Right.
So those are the simple ones that we spot. And we come in with unbiased third-party opinions. Sometimes unintentionally, internal staff might be a little bit too optimistic or pessimistic
Yeah.
with their projections. And sometimes clients are surprised by the opportunities that we present to them. We help them think outside the box. Have you consider selling the equipment and leasing it back to increase liquidity, or converting certain variable costs fixed costs into variable costs?
Right.
Or it could be, have you considered government grants in that area, or offering stock options to retain talent while reserving cash for the business? You look at the same data on a daily basis constantly. You kind of, your assumptions might make sense to you, but when you present it to an outside consultant, they might see the flaws in it. So that can be the quality issue. Also, it takes time as well, and business owners, they said, some people said to us that they rather their internal staff analyze the data rather than building it. Use the data instead of creating data.
Which is where you guys come into play.
Yeah.
I put out on the table like a couple dishes. I have some like rice and roasted veggies and a salad.
It looks very healthy. It looks very good. Colorful.
Thank you. Thank you.
Summer salad.
If it's not colorful, then I don't know if you're doing it right?
You still like watermelon.
Oh, yeah, totally. A couple peaches. No, I'm kidding. How many years out do you look?
Usually we look at 3 years.
Okay.
Before the current year is very critical, whether it's going to be a V-shaped recovery or W-shaped recovery that we hear a lot about.
Last time we mentioned investors as well would need to know what your cash flow looks like. And same thing just for survival.
Yeah, for both. For businesses that think that they're doing well, and it's important to showcase that, their projection, to show solid projections. Investors are attracted to not just sustainable profitability, but also the fact that the business is resilient during a pandemic. That is important. Yeah, and survival is important. You need to know your cash right now, and a week from now, or a month from now, even 3 months, 6 months. It is important.
Yeah. I've heard of cases where banks and other institutions are literally pulling and calling their loans and other cases where landlords are making demands upfront. And so the cash flow projection is even more important to prove that you actually do have the ability to pay.
Yeah. And in some cases, they, if the businesses are doing well, I said, on the positive side, some businesses are actually are growing and expanding.
There are many businesses that are growing, yes.
There are some, yeah. And now they look at the situation and they even make the decision not like to pay off that loan and get the different types of financing. You know, they
Right.
can get an investor and sell a portion of the business.
Right. Right. There's also the possibility of valuing, right? Like there's the actual valuation, not just the cash flow projection. How much is this business going to make? Because the cash flow projection goes into the valuation, I'm assuming, right? Yeah. So then the valuation, usually you mentioned at the beginning, valuations coming up in divorces very, very frequently between a couple splitting and needing to evaluate the business that they've built together over a lifetime. But there's also estate planning that comes up in terms of preparing for next generations. Why else would somebody want to value something? And especially right now, because it seems to me that in a lot of cases, business valuations have dropped. And there are some cases where they have increased. Like I got a client who's their bike shop. They've seen 3 times the sales in the last couple months that they usually see in a year, right?
For businesses that expect a drop in the value of their business, they usually trigger an estate freeze. Generally speaking, an estate freeze is for tax purposes is the transfer of control of a privately owned business from, let's say, the founder generation to their kids, if the kids are interested in taking over. And with the estate freeze, capital gain tax can be deferred. So, which is a tax planning tool.
Right.
So for some of the businesses that see a significant drop in their value, for example, they've been incurring significant loss since COVID. If the value of the business drop, then the capital gain tax from the transfer will be reduced because there's only so they will have to pay it eventually. So that's when they want to have that done. And some of our clients that are doing this, they said they've been contemplating this transition for a while. So now it's just the perfect time just to get it done.
So let's talk about that a little bit more. If we have basically these low value, cheap companies, as you're saying, cheap, where you can value them at a lower value, then obviously there are tax savings to be made, because intergenerationally, if you sell something for $500,000, you pay less tax than if you sell it for $1 million. Easy, right?
Yeah.
So is it just between families that this is working? Or, I mean, I have a client who I know he's planning on passing his consulting business down to one of the major advisors, one of the major consultants within his practice. But they're not related. So does the estate freeze still apply then, or how does somebody work with it?
No, the estate freeze is only applicable to related parties. So in that case, if the values drop and he doesn't mind selling it now, then it would reduce his capital gain tax as well. Because, values low.
So it would be still, it sounds, beneficial to get a valuation done now if you want to sell for a lower value and reduce your capital gains. So are there any other benefits to valuing low?
Yeah, so in 2017, there is a tax introduced called TOSI, is tax on split income.
Yes.
So before, if you're an active family member, you can still receive a dividend, but with TOSI that comes in, that kind of heavy tax of those individuals. So a family member who's not active in the business would be required to acquire a minimum of 10% of voting shares. So with the value of the business drop, they can take advantage of that and acquire the shares so that they can
for a lower price.
Exactly. And divorce, depending on what side you're on, you probably want a lower value if you're the owner of the business.
Yeah, that makes a lot of sense. So basically what I'm hearing from you is valuations would be beneficial for those who are either trying to prove that their business is coming out of this on top, like long term saying like, look, our value is greater because of how well we're handling COVID.
Yeah.
Or on the flip side, for those who want to value their companies lower, that would be primarily for tax purposes and or to structure or allow basically people to buy in who otherwise, would have to pay a higher price.
Yeah.
Okay. I do have some curry cauliflower, so that maybe that's.
Oh my goodness. That's so exotic.
It really isn't. I just toss it and stuff and then throw it in the oven. It's not that fancy. A business valuation, is that something that anybody can do, or do you need to have a chartered business valuator do it?
The transaction that they want more due diligence, for example, tax purposes, it can be challenged if you don't, if there's not much, it's not done by a certified or chartered business valuator, especially with COVID, and you say that the value of your business drop, it can be heavily scrutinized by the CRA.
Right.
And in our profession, like we prepare our valuation in a defensible way.
That makes sense. So basically there's like having a valuation from someone like yourself is like putting a rubber stamp on a real value that says, yes, this is, this has been audited, this has been reviewed, this is a value that we can stand behind. So this is a document that you can use whenever you're applying for loans, if you're looking at leasing, and this was actually an important thing you mentioned last time. I don't know how it hasn't come up yet, but renegotiating. You mentioned that if you can prove that you've got really good cash flow and that you can prove that your business is doing well, that you could possibly renegotiate your interest rates down, your loans down, things like that.
Yeah. And I know that when you go to the bank, with the M&A transaction, if you go to a bank and you ask for a loan, they would need, on the cases that I work on, they would need not just a valuation report done by a chartered business valuator, but also at the level with significant due diligence. There are 3 valuation reports that we prepare, but they would need like the middle or the highest to meet their requirement to get the loan.
How many page document is this report?
Usually it depends on how big the business is. Sometimes a company would have 5 or 6 subsidiaries, so you can multiply the number of pages. But if it's just a standalone business, it can range from 20 to 40 or 50 pages.
Yeah, and that's totally something that someone with no experience in this wants to do on their spare time, right?
Yeah.
No, it sounds like there's a lot of value in using somebody who's a professional at doing this. And I think it's also important to note, though, like the benefit of, as a business owner, having some real hard numbers, because you said that some businesses do it on the back of a napkin. Man, every business does. Everyone that I've talked to that owns a business, when I ask them what the value is, they're like,
we can come in, and especially many times in many transactions we are hired as jointly retained, so we work independently from either the seller or the buyer, so that make it put more confidence in both sides.
Yeah, it does. That's cool. Gives you the unbiased opinion. Which is important. So was there anything else that you wanted to mention, Yen, or should I let you go and let you have some dinner?
No, it's great to have this opportunity. So as we talk a lot about cash flow, I think, including myself, it's important to know where we're going to be in the next couple of weeks or a couple of months, what's going to happen in this province. There's a lot of factors that you cannot control, but one thing you can control is having an active cash flow management system in place, right?
Yeah.
And enjoy your
thank you, Yen.
dinner as well.
Thank you for joining me. I thought this went really well. Have a great evening.
Bye-bye.